Adulting 101. Do not keep your cash in the bank. Welcome to Profitability Plus. In this video series, we explore 6 diverse investment avenues that counteract traditional banking's inability to preserve wealth against inflation. Precious metals. Gold, silver, and platinum, often termed God's money, retain value amid economic volatility. Unlike fiat currencies susceptible to inflationary pressures, precious metals offer stability and long-term growth potential. Prime XBT's forecasts project gold soaring to $10,000 by 2032, a 5-fold increase from 2023. Industrial commodities. Industrial commodities like silver, cobalt, nickel, and copper hold intrinsic value due to their utility across various sectors. Demand surges, especially in emerging technologies like electric vehicles, drive exponential price appreciation. Investing in mining stocks or derivatives presents accessible avenues for exposure. Safe haven currencies. Amid fluctuating fiat currencies, geopolitical stability anchors wealth preservation. The Swiss franc, a quintessential safe haven asset, shields against currency depreciation during crisis. Diversified portfolios include superior currencies like the Swiss franc, British pound, and Chinese yuan through currency ETFs or forex brokers. Sovereign guarantees. Government securities offer a reliable store of value backed by a nation's creditworthiness. Treasury investments, supported by robust economies like the US, outperform traditional banking returns. Discerning investors prioritize stable government securities, mindful of historical sovereign debt crisis. Value stocks and mutual funds. Value stocks, epitomized by established companies with enduring fundamentals, yield stable dividends and consistent growth. For retail investors, dividend-focused mutual funds provide accessible exposure to value-driven portfolios like the Vanguard High Dividend Yield Index Fund Admiral shares. Land and real estate. Land and real estate, immune to depreciation, serve as reliable inflation hedges. Despite market fluctuations, housing prices exhibit consistent growth over time. Entry into real estate markets is facilitated through REITs, granting fractional ownership of lucrative properties like healthcare real estate. Collectibles. Rare collectibles, spanning vintage cars to iconic artworks, appreciate over time, transcending traditional investment paradigms. Online platforms democratize access to collectible markets, enabling fractional ownership for aspiring investors. In addition to exploring 6 diverse investment avenues, let's dive into Dave Ramsey's 7 baby steps, a practical roadmap for financial success. Baby Step 1. $1,000 Emergency Fund. Begin by setting aside $1,000 for emergencies. Life is unpredictable, and this fund acts as a safety net for unexpected expenses like car repairs or medical bills, ensuring you're prepared for whatever comes your way. Baby Step Number 2. Pay off all debt, except mortgage. Eliminate all non-mortgage debt, including credit cards, personal loans, and car loans. By freeing yourself from the burden of debt, you regain control of your finances and can focus on building wealth for the future. Baby Step 3. 3 to 6 months of living expenses. Save 3 to 6 months worth of living expenses in an emergency fund. This provides financial security in case of job loss or other unforeseen circumstances, allowing you to weather any storm with confidence. Baby Step 4. Invest 15% of household income. Invest 15% of your household income into retirement accounts like IRAs and 401ks. Planning for the future ensures a comfortable retirement and long-term financial stability. Baby Step Number 5. College funding. Save for your children's college education or other educational expenses. By investing in their future, You empower them to pursue their dreams without the burden of student loans. Baby Step 6. Pay off mortgage early. Accelerate your mortgage payments to pay off your home early. Being mortgage-free not only frees up your monthly budget but also provides peace of mind and financial flexibility. Baby Step 7. Build wealth and give. Once you've achieved financial stability, focus on building wealth and giving back to others, whether through charitable donations, funding college scholarships, or supporting community initiatives. You can make a positive impact on the world around you. By following Dave Ramsey's 7 baby steps, you'll embark on a journey towards financial freedom, setting yourself up for a prosperous and fulfilling future. Understanding these financial principles is crucial for adults as they navigate various life stages, ensuring they make informed decisions that align with their long-term financial well-being. Meanwhile, here's what the team wants you to realize and understand. Don't worry, we'll get through all of these together. Prioritize contentment. Cultivating contentment means finding satisfaction and gratitude in what you currently have, rather than constantly chasing after more material possessions. This mindset shift can lead to better financial decisions as you focus on needs rather than wants. Practice gratitude for the things you already possess and strive to live within your means. Contentment not only improves your financial well-being, but also enhances your overall peace of mind and happiness. Beware of lifestyle creep. Lifestyle creep occurs when your spending gradually increases as your income rises. It's essential to be mindful of this phenomenon and resist the temptation to inflate your lifestyle unnecessarily. Living below your means, regardless of income level, is crucial for long-term financial success. As your income grows, prioritize saving and investing rather than succumbing to lifestyle inflation. Regularly review your expenses to identify areas where you can cut back and maintain a budget that aligns with your financial goals. Buy a house only when ready. Home ownership is a significant financial commitment, and it's essential to ensure you're financially prepared before taking the plunge. Assess your financial situation carefully, considering factors such as stable employment, a healthy credit score, and a sufficient emergency fund. Don't rush into buying a home if you're not ready or if you're uncertain about your long-term plans. Take the time to save for a down payment, researching housing market trends, and assess the affordability of home ownership in your area. Stay calm about house purchases. While buying a house is a significant decision, it's essential not to let the process overwhelm you with stress. Approach the home buying process with a level head, realistic expectations, and a clear understanding of your financial limits. Avoid making impulsive decisions based on emotions or external pressure. Take your time to explore various options, negotiate effectively, and ensure that the chosen property aligns with your financial goals and lifestyle needs. Consider affordable options. If housing prices in your area are prohibitively high, explore alternative options to make home ownership more affordable. Consider looking for properties in up-and-coming neighborhoods, considering fixer-uppers that offer potential value appreciation, or exploring government-backed loan programs for first-time home buyers. Starting with a starter home or considering alternative housing arrangements such as townhouses or condominiums can also be more affordable entry points into the housing market. Avoid house poor situations. House poor refers to a situation where a significant portion of your income goes toward home ownership expenses, leaving little room for other financial priorities or emergencies. To avoid this scenario, ensure that your mortgage payments, property taxes, insurance, and maintenance costs are manageable within your budget. Aim for a conservative approach to home affordability, where your housing expenses represent a reasonable percentage of your overall income. Prioritize building an emergency fund and maintaining flexibility in your budget to handle unexpected expenses without financial strain. Take your time. Rushing into a home purchase without thorough consideration can lead to financial stress and regret. Take the time to research the housing market, understand your financial capabilities, and define your housing needs and priorities. Consider working with a real estate agent who understands your financial goals and can guide you through the home buying process. Don't feel pressured to buy a house quickly. Instead, prioritize making informed decisions that align with your long-term financial well-being and lifestyle preferences. Thank you for joining us at Profitability Plus. We're grateful for the opportunity to share these valuable insights with you. Stay tuned for more tips and strategies to enhance your profitability journey. Wishing you success and prosperity ahead!